Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 25th of May, 2021. I'm guessing we're around 7:10, 7:15 at night. What an interesting market we're having. As you can see, the stock indices moving up. They got hit today, late in the day. They're making that up right now. And what the market keeps looking at is what's really going on with interest rates, because they've continued to fall. You'll see that we're getting up to the resistance zones, though, in the futures market, which tells me better pay attention there. The gold market has made it up to the level that I've been predicting in my newsletter. I thought it would make a challenge of the 1900 level. It has finally done so. Look at the strength in the euro. You're sitting here at 122.5, the dollar down. So what has been happening is finally, the differential between the dollar, the euro, and the other basket of currencies fading on the dollar about 5 months later than many of the analysts thought from December, but starting to really grab hold, and I think that's important. Energy markets, we're going to find out what Iran wants to do. I just saw the API numbers. They came out at 3:30 this afternoon, at least that's when I saw them. And we have declines in all the categories, so it was a friendly number. Now we have to see the EIA. That's keeping the market bid nicely. But the market's also looking over their shoulder going, are we going to let these Iranians into the marketplace? Are we going to let them actually do something? I don't know. Iran's elections for the presidency comes up. The hardliners have put up 7 candidates that, believe me, none are American friendly. None. So I don't know what our president's going to do in the negotiations. But mine's better than mine. Figure that out. In the grain markets, we're having ideal growing weather. And when you get that, that puts pressure on the grains. Rain makes grain. I didn't make that up. That's how it works. They're getting those parts. So as you look at the S&P, you're not in an all-time high close, but you're up nicely. You haven't given up very much from there. When you take a look at what's going on, you are still caught between this high and that low right at the beginning of May. You have not come out of it. You have not made a new high for the month of May since that was established. That's neither bullish nor bearish. I'm just saying that one swoop in a 5-day period for 2 weeks now plus, you have just been going sideways in there. What is the trend? It's up. You have a pattern where you've got higher lows. I think you see that. Higher highs. It's what I love about the swing line. The swing line isn't you or me. It's got a set of rules. It looks at the prior day. Is it a higher high day, a lower low day, an inside day, an outside day, up or down? And I teach you how to draw them by hand, and then I wrote the indicator in our charting software so it plots it. I can open up any chart, throw the name off, I don't care. Is the market in an uptrend or a downtrend? Second thing, what's the risk associated with the trend? You look right here and you see that that could be the 41, 42, 50. We take another look and we say, okay, let's filter that. Is the market trading where in relation to the 18-day average? Why? I want to filter that. I know the trend is up. What's the bias and where could the support be in the market? One of the areas, that 18-day average of closes. Okay, what don't I want to hit here? What do I think the pros might do? They might buy that 18-day average. It's what I've been saying in my morning subscriber report. Where's the resistance then in the market? You've got, it's not the 200-day, it's under the market. It's not the 100, that's here. Here's the 18. Well, let's go to the Bollinger Bands and see what they'll offer us. Bingo. 42, 36, 50. But to get there, you got to make a challenge of that prior high. Can the market do it? That's the first thing. Second thing, where are we at in momentum? We've spent an awful lot of energy. The market has come from an oversold condition, and now any numbers over 70, either one of the indicator numbers on the slow stochastic over 70 is overbought. So I have a market approaching what I call the overbought area now into the 42.36 area, plus this is what I call a psychiatry trade. Why? Because you get into these Bollinger Bands and you're looking for the breakout up, you don't get it. You're looking for the breakout down, you don't get it. And you stay in the sideways congestion. This is a classic picture of congestion. Yeah, there are opportunities within there, but the tighter it gets, the less the opportunity. And when you get up like these areas looking for follow through, better learn how to work with that. And that brings up something. You know, I've promised you I'm going to start my What's Up, and this is brand new from me as to what we're trying to do in our company. Come this Thursday at 12:30 p.m. Central Time, I will open up a Zoom room. So you come in, you can do it on a telephone, you can do it on your PC, anything you want there, or your computers. It's fast-paced. You bring your questions in stock, futures, spider, symbols, ETFs, whatever it is. My job is you'll bring them, we'll throw up a chart, we'll see what they look like, answer the question, and move on to the next one. 15 to 20 minutes of it. I don't want to get caught up in this as a webinar. Ira, would you explain to me how Bollinger Bands work and what this? I'm not doing that. That's when we'll do a regular webinar. These I want to make a mainstay. It's free for you to join in. You'll see up here that there is an icon. Click on it. It'll take you to the invite area. You got to sign up. Once you sign up, an email is sent to you with the link. It will open up about 12:20. Once it opens, you're not going to be able to get in. And in addition, it has limited seating. I'm not going to buy these Zoom rooms for thousands of people. Don't want to do it. This is free for you. I think it'll be a lot of fun. So please do that. I'll leave this up, the rest of this, as I talk, so you know you can click that at any time. Okay. So in the Nasdaq, trend up, but the same situation. You instantly overbought, trend up. I look for solid resistance, 13,873, and you're far away from the highs you made back here. Again, is the sell May go away program working or not? We don't know. All right, May's not over, and I've mentioned that to you right at the beginning. Let's see what we do as we come out of May is more important to me. In the Dow, there's your May high. The pattern is a lower low, a higher high, which is no trend at all. It's a whipsaw market, and I'm going to repeat myself. Caught in the Bollinger Bands. You can see it. Yes, you tried to break out to the upside, and once you took out that low, it was a false breakout. And in this market, the difference is, and I want to bring you right here, you had a sign, because you closed in the top quadrant there and the day after it higher in the top, of a true breakout. And as you can see, the market made its move. You cannot take out the previous low, otherwise that proves to be the trap. So I think the pros bought into this area here, possibly. You can see momentum had turned down and you're still overbought at 76.22. The way that I teach charting, I'm always looking for filters. I'm trying to filter out to get to the point of not making a trade, the opposite of what you probably do. Most people are looking for the reason to make the trade. I'm looking for the reason not to. And when I run out of reasons, I tell my subscribers to make the trade. Does that make sense? It's the opposite of what a lot of people do, but if you think of the logic of it, it makes sense. The market let go right on that day. They wouldn't have been caught. And since then, you have just been in a whipsaw in the market. That's all you've been doing. There isn't an awful lot to be done in that. We're waiting to see right now what's the next phase. In the Russell, you stuck your head out for the first time over that 18-day average, and instantly today, you got slammed back, closing at 2205.50 under the 18-day average. So the battleground, pretty clear. Green, the 100-day average. Red, the 18. If you clear this, the upper Bollinger Band. If you break through 2200, you might cause a break right back to the lower band, and momentum is flat. So the trend is up. Swing lines, higher highs, higher lows. You closed under the 18-day average. The bias is down and momentum is flat, and you're fighting right there tonight. It's an interesting play. We'll see which way it wants to finish it up. In the VIX, if this market breaks further, I think the pros will be writing puts right here. Against that, The 1540 level, looking to get back to 2016. I am not saying it has to go there. You're not in a trend. You have a higher high, lower low, and you're oversold. But if you had a hard break, that's what I think they would do. Now in the bond market, as I said, we've got a pattern here where the market without a trend, because you have a lower low and a higher high, is challenging the upper Bollinger Band, along with, if it clears that, the 100-day average. That's an awful lot of resistance. No, it is not the spot that I think one goes short, if that's what you're thinking. But I also think it's the spot, and I do think that, where the longs start coming out of the market here. They've driven it nicely, but is there anything left in it? When you get to the 10-year note, it's even cleaner. You're right at that upper Bollinger Band. So I'm just giving you what I'm smelling there. Again, I call this the psychiatry trade because I'm dialing my psychiatrist. It's not following through again. Well, why isn't this happening? It's taking my time. I've got money committed. You know the game. We've all been there. If you think I haven't, I even went to Notre Dame and I have a candle. And I light the candle when things are real bad. My wife cracks up. It's true story. And that's what you do. You know, it's anything that you think might work. God, I'll be a good boy. I laugh about it. It's also true. In the dollar index, coming down, lower highs, lower lows. Are we embedded? Well, the game changed today. You can't count Wednesday, tonight. So we go into, did we have 3 days in a row at least where the numbers in the slow stochastic are staying under 20? Day one was yesterday. Actually, it's today, Tuesday. Day two is yesterday, which is Monday, and Friday you had it. Now you got it. So until the red line gets up and over 20 on rallies, I'm expecting rather aggressive selling by the pros in this market, looking still for lower prices in here. So just telling you what I'm smelling there. What about the euro? Well, is it a flip-flop? You can't count today. So you've got to go to Tuesday. Both numbers over 80. Both numbers over 80 on Monday. But I'll tell you what they did not do. They weren't there on Friday. So you're overbought as can be, waiting to see, can you continue up, or you're going to back off and not embed. You sit there like this, you take your hands, you put them in your pocket, and you wait to see if it's going to happen. British pound, I didn't like what I saw this morning. When I was putting out early, 5:40 in the morning, I'm talking to my subscribers, and I'm going, you know, folks, the market fell to a key buy area early on, and I said, I don't think so. You lost the embedded reading. It's flirting with losing it. Why do it? And as it turned out to be good and a good play. You've lost it. It could be regained by the close tomorrow. You know, take the course, you learn how that works. Barring that, if it stays lost, I'm going to look for price in the 18-day average to come together again, and the game starts fresh after that. Bitcoin. So Bitcoin has had a nice bounce. It's oversold. It's just, that oversold, by the way, whenever you have readings that are under 30, I think it keeps new money from going short. So the way I teach charting, yeah, it's in a downtrend, but I don't think you're attracting new short sales. It's that simple. When I go to Brent versus WTI. Again, you're going to be playing the differentials as to what's going to happen with Iran on this Brent crude. That's what I think this is all about. You're sort of caught in what we again call this, it's a broad sideways action. It's 400 points. It's not as tight as I'd like to see to call it a psychiatry trade, but it's one of these things where the market is just walking back and forth, almost trendless inside of those bands. Same thing going on in WTI crude. You know, you cannot call 450 points a narrow range. It's not. It's a broad range, but it's not really doing anything. It's almost making you sell the rallies over the 18-day average, which you should never do, and buy the breaks under it to go long. It'll set you up wrong. You'll get all backwards on those type of trades. So when you put it together, you try to figure out what to do. Remember, if you click here, you can get into the invite of it. No charge to you to come in on Thursday. We'll see how you all like it. I'm Ira Epstein. You have a great day, and I will talk to you tomorrow.